And we're live. Hello and welcome to the 39th episode of Game Theory Gang. I'm your host, Maddie Allen, with co-host ChrispyMan of HexFire.io and special guest Axis Alive. Welcome.
What's going on, everybody in the chat?
Hello, hello. What's going on, Maddie?
Happy to be here, Maddie. It's been a minute.
You guys are both very quantitatively gifted and very interested in Hex, and so I think this is going to be a great episode.
I think so too. Pretty excited. I was just going to say that Crispy and I have been talking on the side now for a couple of weeks, on and off, and it's interesting. You know, the tools he built over at HexFire.io really opened up our ability to read the blockchain in an easy way, and now it's all public and available. So I'm excited to dive into the chain analysis, maybe look at the technicals, and then perhaps talk a little bit about today's congressional hearing.
Yeah, totally. I think in general, the exposure that most of the world is getting into crypto, getting on the subject of crypto this week is in a negative light, right? Although we might not categorize FTX as real crypto, I've been following along. Have you guys been staying tuned to some of the saga that is the FTX $10 billion debacle?
Oh, yeah.
It's hard not to when I'm on Twitter and I just constantly see it. So, yeah, it's definitely been popping up.
Well, it's mainstream too, right? So it's beyond just crypto.
Mm-hmm.
It's important.
No coin. That's a good point. I was just, to your point, these are the times when things go mainstream, is when things go bad, not when things are good. We've been through two major cycles now where it's gotten close to mainstream but never quite pushed through. But now, because it's affected enough people, the mainstream people look at it in any which way. So, as they say, any kind of press is good press, and this is great press for crypto.
Mm-hmm.
I think, I think that there's a risk. I would probably agree that all press is good press to a certain extent, but when the terms end up getting co-opted and when people don't even know what real crypto is anymore, that's where I get a little concerned about the negative exposure. But that's yet to be seen, kind of how people will figure out what real crypto is. It means holding your own keys. And so anybody who is depositing with FTX, they were giving up their keys mostly because they wanted to trade, which is also something that is unhealthy for people in general. I think that there's statistics that 70 or 80% of people who trade end up losing. And that can really destroy a lot of lives. And so the fact that there was a fraudster, alleged Sam Bankman-Fried, who had, basically had been cooking the books for quite some time, it seems, basically taking loans from customer funds without any corporate controls. It's pretty remarkable. The same guy who cleaned up Enron testified at the Senate financial hearing today, which was broadcast for about 4 hours. I've watched the first hour of it. It's fascinating. It's almost like the kind of maybe like the Olympics of talking about crypto regulation or something, because you can tell all these senators, they've spent a long time thinking about what they're going to say for 5 minutes, and then each of the points that people are making, I think, is it's a pretty good reflection of where we're at as an industry. And so I would encourage people, if you haven't at least sampled some of what's been going on with the Senate financial hearing earlier today, that's definitely a good thing to take a look at. You have you'll start to get a sense, and I haven't always really followed the regulation side. I haven't really followed who the players are at the lawmaking side, because they've intentionally been not making laws and letting the regulatory agencies take care of it, like the SEC and different agencies. And what we cover normally on Game Theory Gang and on Hex shows is very much different than people putting their coins on a centralized exchange. to trade. And so, yeah, it's
Well,
really interesting to see.
you're saying that, and I know we say it all the time. And I know that most of the viewers know that, but the new folks, they don't know, right? So it needs to be said over and over again.
Yeah. Trading is bad for you.
Yeah, trading is hard, you know. Like only 9% of all people succeed at that, and most of the 9%, a percentage of those guys fail at some point.
Yeah.
But that's not our decision to encourage or discourage, people what people want to do with their own money. But I think ultimately you should always hedge your bets by doing a safe long-term investment, And I mean, there's many of them out there, and crypto is the best performing asset class. So you're going to want to find that in crypto if you can. And I think like a lot of the reason why people fall on these videos is because of just that, is that we found one solution to that problem.
Yeah. I mean, the problem of even trading and crypto in general, I mean, Hex solves the problem of being missing out because the crypto is going up or going down too much for you to handle. When you time lock, and in the case of a staking ladder, it allows people to really dollar cost average out over time, and to kind of defer their selling decision. And that if you have something with good product market fit, in this case, something that has game theory that allows people to delay gratification and to prove how they're doing that on the blockchain and earn, rewards for doing so. It's a really good system to like dilute people who want to be traders and to reward people who want to be stakers, and let the cards fall as they will.
Mm-hmm. I think the key here is understanding where the value in something like, for example, the Hex contract comes from, because you can say that it's good to delay gratification, but if people don't understand why that incentive is good, then they're just going to miss it. And that's what's happened to a lot of people since the start of Hex, is that they misinterpret what Hex is for what it isn't. And so there's a lot of like name calling on what it is and how it works. And ultimately, you need to do the due diligence or listen to somebody who is proficient in this ecosystem to really understand why this thing will go up in price again. Like if you can't come to that conclusion, then you don't understand the system. So like if you don't know the functions by which the price is going to rise again, you might never know why it's down so much or why it might rise again. And that's key to understanding why you're going to make an investment in it in the first place.
Yeah, isn't it interesting, Axis, that that's the case, right? Because every cycle it's like this, and every cycle the FUD comes out really strong, and it's all going to end because it never made sense in the first place. But then you got to think, why did you get involved in the first place? Well, at some point you must have gone over to the point where you believe that it could be worth something. That this is a workable system, that enough people will work in crypto, just in general, never mind Hex, and so nothing's changed. I mean, it's just 13 years later, little things have changed. Technology and stuff maybe changed a little bit, but the whole concept just hasn't changed. And so it's interesting that, yes, we're all emotional animals, man. In the bull, we're all in, but in the bear, we all feel it. Like, oh, what are we doing? This is crazy. Yeah.
Mm-hmm.
Yo, shout out to Ryan Lopez. Thank you for the $50 super chat. He says, smash the like. So
Hey,
hit the
Ryan.
like and subscribe button. Thanks. Thank you so much, Ryan.
Thanks for your support, brother. We'll keep in touch.
He is the man.
So I think like, identifying where the value comes from is probably a key point. And so what I always tell people with this Hex thing is that the reason why money has value in the world is because it's backed by powerful monetary policy and social consensus. So what does Hex have in the form of monetary policy? Well, the code is immutable. It cannot be changed by anybody in the system. Even the founder can't change the code. Nobody can change the code. And the code inflates at a rate of 3.69% per year. And that's important because when you factor in the time locking mechanic, the amount of coins that are coming off on a yearly basis right now are actually coming down at less than 50% of even that metric, meaning currently, and this is as of a few days ago, Hex has got an inflation rate of roughly about 1.31%. That's less than Bitcoin. right now. Bitcoin is inflating faster than Hex is relative to each total supply. So that's important. If you don't understand why monetary policy is important, then you're going to have a lot of trouble in economics. You're going to have a lot of trouble finding good investments. So number one point, the code is permanent. It'll always live on the Ethereum blockchain no matter what. And then the second point is social consensus. So there's always going to be money locked up in this system. Why? Because a lot of big players and little players have come in and staked billions of dollars of Hex. Even at down 95%, there's still billions of dollars locked up in Hex. Those people are going to acquire the coin at a low enough price at some point at enough scale to flip the amount of sellers. Well, why would they do that? Well, two reasons. Number one, you don't want to let new people come into the system and absorb all of the coins and become big enough actors that they could affect price performance long term. Now, we've only been in a downtrend for roughly a little over a year. So if you let that go on for years to come and the price keeps dropping another 99% every 3 months, well, then all of that money that's locked up in the system is going to get devalued and reabsorbed potentially by new bad actors. So it's only in the best interest of the current users to protect the price and to support their bags that is already earning an insane yield out into the future.
Exactly. Yeah. So people who are staked long term have an incentive to protect the system, especially if they're whales. Is that what you're saying?
Yeah, and we have numerous instances of large wallets. Some of them are Genesis Ethereum whales that have went in so heavy into Hex that they still have. So I'll give you an example of one. There is an account that pulled out over $70 million of Ethereum and put it into USDC at the peak of the last pulse. ETH was around $2,800. But before he did that, he was putting thousands, and I mean in one market buy, the guy did 10,000 ETH market buy of Hex and moved the price up what ended up being 1,000% in like 20 some days. Because he made the first candle to 10x the price or to double the price. And then the amount of people that came in after that just raised the floor even higher and higher and higher. And so the point is that this guy's put so much economic energy of ETH, something that he got early for a low price, and he held it for years into the system, locked it up for anywhere from 10, 15 years in some cases, and he continued to support the price and continues to support it to this day. Some of the most recent pumps on Hex have come from this user. And he's not alone. The next class of multimillionaires or billionaires that comes together and strategizes around a solid dollar cost averaging strategy to get into the system to start earning a yield, the best strategy that you could come up with is somehow get enough of the supply and then increase the price by a factor of 10 and then just make sure that it holds its floor. Why would people come in after them? Well, because people love chasing green candles. Retail chases green candles all the time. So like if you don't know these concepts of how these market cycles play out and why they play out, it's just simple economics, supply and demand, and being in early and protecting the asset that's paying you to protect it. It's a lot of these things that are still applicable in the real world and legacy markets. And I think a lot of that gets forgotten or just goes lost amongst time because hexagons aren't doing a good enough job reminding the general public what this system does, how it works, and why it matters.
And how it's unique. It's very unique compared to any other crypto.
The other thing that's important to talk about is centralization. Because a lot of people think that because some wallets have such a large portion of the supply that they can affect the outcome of the network. So this is a twofold answer, and there is some aspects of this that are just unknowns that need to be known, to make people feel comfortable investing in the system. So there's large players in the system that have tons of the supply, but unless you go in and look at the chain analysis or talk to somebody who's looked at the chain analysis, you wouldn't know what their past behaviors have been. So you couldn't extrapolate forward what they might do in the future. So in the case of this, just because you have a large percentage of the supply doesn't mean that you can come in and change the code. The code's permanent. That's for sure. But if they have enough of the supply, they can technically stake much, much more of their supply and affect the yield that you're getting off your stakes. That is a concern unless you've went back and seen the past behavior of those wallets, and then you can extrapolate forward the hows and the whys why that person is employing a certain strategy. So to be more specific, why would somebody that holds a large percentage of the supply stake everything that they had, steal all the yield from the rest of the users, and basically bleed out the rest of the users from not letting them get any yield? Well, because maybe this player sees that the price is dumping forever, for example, and then they're like, well, how are we going to turn price around? Well, we need to stake a large percentage so that those guys can no longer get such a high yield so that they can no longer dump the price forever. But that still hasn't been a case that's happened yet. And the amount of coins that the users are actually holding right now liquid and the amount of coins that the users have staked, most of the danger accounts that I'm following in my private Discord group are not enough to push the price that much lower. Billions of hex has been completely redistributed over the last 300 plus days. That's important because there's really only about 60 billion coins in user hands. And most of those coins, the ones that were from accounts that have a repeated offenses of mass selling or hurting the price, they're either liquidated, they're out, or they have to EES some of their biggest stakes, have enough ammo to get the price low enough. You need to find an account that can sell 300 to 500 million hex in like a few hours in order to get the price sub penny. Good luck finding that guy. Unless there was some kind of coordinated attack on price by multiple large wallets, that opportunity just isn't going to come. So really, this is a game of time right now. And as we all know, these market cycles in crypto, they last a few years. A lot of this is tied to the Bitcoin halving cycle. But it is my belief that Ethereum and thusly Hex, being unique in their own way, are going to start to decouple. They already have, actually, and I can show it in the technicals here in a little bit, away from the Bitcoin 4-year cycle. Because as time goes on, DeFi is going to gain dominance and CeFi is going to lose dominance, simply as a function of ease of use and less middlemen.
I knew this was a game of time.
So there was a tweet out that I put out today. The government put out, one of the government accounts on Department of Energy made a tweet that we have successfully created ignition and fusion, which is like it's a huge leap forward in energy production. So that over the next 100 years, our lives are going to be radically changed by new forms of energy. This is important to hexagons because what backs the hex cryptocurrency is time, which is one of the most valuable, if not the most valuable asset that we have as humans that are limited in time by nature. That should have a prominent value proposition over anything, even over energy itself in the form of Bitcoin mining energy. And this is the example that I made was, how is Bitcoin mining or the proof of work narrative going to fit into a world where energy is limitless and almost zero cost? And the answer to that is it may not over a 100-year time frame, but ultimately hexagons are so forward thinking with what they have here that they're protecting themselves by putting their value in time itself, so that not even some sort of quantum leap in energy can affect us. And Ethereum is this network that it's been built on, and that's already moved to proof of stake, so it's moved away from an energy base.
Yeah, I think like the Bitcoin narrative is interesting to like contrast with Hex because they are different models of storing value over time, and I think that the store of value function of money, if we compare it to any of the other functions of money that are usually ascribed, so you've got a medium of exchange, which is how most people you know deal with their money, is like, well, what can it buy me? What can I exchange it for? And then there's unit of account, which is a more like subconscious thing of like how you kind of make sense of how much purchasing power you have across multiple different mediums, such as uh, people don't think of how expensive everything is in their lives based on like the price of gold or the currency of another country. Usually it's their own country's currency. But by far, the most valuable function of money is store of value. And what better way could you have for proving that you believe in an economic policy other than time locking your money? That's literally what storing value over time is. And it's and the reason why the dollar and why the world is like starting to the world kind of describes, so like let's take the two psychologists who got the Nobel Prize in economics. They thought that they discovered humans are bad at saving, so their solution was to nudge people into more retirement accounts where there's centralized like power basically, and there's the downsides of centralization, when in reality people aren't bad at saving money. Money's bad at storing value.
Correct.
And so people are like blaming themselves without even realizing it, when in reality, as you're saying, technology is making things cheaper. The government's stealing all that value through inflation, and they're still devaluing the currency even more than technology can cause the value to go up. And so to have something that is really linked to the definition of what money can, one of the best functions in my mind of currency is that it allows people to store value, because if you stake your savings by just holding them, then you're gonna be incentivized to cooperate more with other humans, and that's going to make the world a better place, literally. But if you're constantly seeking immediate gratification, then that's going to be a symptom of the illness of the monetary policy. So yeah, so I can definitely vibe with what you're saying about Hex being a superior store of value compared to Bitcoin in a world where technology breakthroughs are coming faster and faster. And
I
that
totally
means
agree.
that the people who can save their value over time are going to get rewarded more and more, likely because of that. Because things are going to be cheaper in the future if you're not valuing in dollars that are being overprinted.
I think generally people give up their private keys in quotes because in legacy you don't actually have private keys. But I think in general people are so willing to give up control of their money because they're scared that they don't have the right knowledge or the willpower or the understanding to put their money in a safe place. And so they're relying on and trusting in authorities or financial planners or brokerages or whoever else or anybody else to get the money away from them so they can't spend it and they get the feeling of saving. Yeah, go ahead.
Yeah, well, 100% on that. But in the outside the crypto world, right? You don't really. There are some opportunities where you can invest on your own, but the system is set up to require middlemen, so people don't know anything different.
That's a key point too. I guess I didn't really, think to frame it that way, and it's important because we're so, I should say the public is so indoctrinated into giving up responsibility and relying on somebody else. We just take for granted that, you put your money in a bank and you leave it there, and then that's, I would say generally a large portion of the population, believes that as long as that their cash balance in their account is large enough to cover their expenses for 6 to 12 months, they're feeling safe. They are feeling safe. But the harsh reality is that under the current system, under the current conditions and what's happening in the macro economy right now, nothing could be further from the truth. You are literally one bad event away from a bank run or some sort of a fallout that, half of your life, I could say a massive stock market crash, for example, or, some sort of event where your life savings can be wiped out so simply, so easily.
Mhm.
And so that then becomes a game of waiting it out, aka, delaying gratification, timing, and things, time itself, that you're waiting out for things to recover. And you just have to survive longer than the next guy. So it ends up becoming a survival of the fittest situation when it doesn't have to be that way.
Yeah, I'm just contemplating that. Let me throw this at you, kind of different thing. I'm not disagreeing with you. I'm just kind of talking out loud
Mhm.
with this. But even going back a few years, I think about myself. I wonder if it resonates with anyone else. Yeah, I definitely had a case of the efforts, right? Like, so what was the situation that most people are living in today? And hopefully, all these Mexicans listen to us. They're not in this situation. They're in a much better spot. But the most people are living paycheck to paycheck, and they don't have any savings. And if they are doing any type of savings, they're might as well be useless because they're not getting any interest on it. They probably are participating in some sort of plan, but somewhere along the way, retirement plan, but somewhere along the way, somebody convinced them it's a really good idea to take that money out as a loan borrowed against yourself and then go spend more money on credit cards. And so pretty much like, and I don't know if you can say everybody, but there's a good portion of the population, man, they're not even thinking as far enough ahead that they need to be worried that somebody's going to rug them, which is kind of sad, you know.
Mm.
Definitely.
You know, they're not.
100% agree with you.
Yeah, because when you're living like that, and I live that way, um, yeah, it's like, what are you going to do? Steal my money? So you take my $200, you know,
Yeah, totally.
or
Totally.
$1,000. So what, right? So it's definitely like a risk thing, right? But then once you figure some stuff out and you start following some of these things and rules that we're talking about, methods where you're like more responsible, then it starts getting exactly what you're talking about, scary as hell. Because all of a sudden you're relying on this thing because you really did save. So you're relying on these third parties to keep you safe and not wreck your retirement. And you can see how well that worked 2 or 3 times in the last few decades, right? Where, hey, I have enough to retire. Oh, I don't. You know, with these revolving events that take place, um, which I guess that's going to happen anyways naturally in cycles. But yeah, yeah, I think what's resonating with me, Axis, as you talk about it, is that we're all like on some journey, right, along the way, learning this stuff, and we all start. Most of us start at the beginning with nothing, and then get started and kind of move your way up. Um, and then that, but you have to change your thinking and your technique and the way you're going to approach it because you start moving all the way to crypto. Initially, folks come in and they're perfectly okay, just like you said. What am I going to do? I got to go to Coinbase, right? I'm not even thinking Coinbase is something I need to be worried about, or Kraken, or any of these other places. And then by association, because FTX exists, everybody's like, well, that's just another one. We'll just go there. And those guys are going to give me interest. Um, I guess when it comes, I guess I'd sum my point up is once people start coming into crypto, as much as we can help them move towards not your keys, not your coins, the better, right?
Totally
Um,
agree.
yeah.
And also, I don't think it's for new people coming in, like it's not a good enough excuse to say, well, I don't know how to move funds around on Ethereum, or I'm not comfortable copy pasting an address because the string is so long, it confuses, for example.
Mm.
Or I need a hardware wallet, or you could think of any number of excuses to keep yourself still in the old system. But if you aren't willing to make the changes aren't going to just happen for you. You do need to learn a little bit with this stuff because you are living in a time period where technology is completely subverting the old system, and smart people and young people on the cutting edge are taking advantage of it and getting rich doing it.
Yeah. Yeah.
You know,
Well,
you
yeah.
can be a paycheck to paycheck person earning only like $300, $400, $500 a paycheck and put in $50 into crypto or $100 into crypto today with these Ethereum gas fees and stake it and earn yield and then receive the price appreciation of the asset. You can do that. And when we're talking price appreciation, at least in hex terms, you're looking at anywhere from like a 30 to a 50x over the course of the next bull run. And that's mathematically provable based on what Hex has already done in price performance and based on the number of users, based on Metcalf's law, based on on-chain analysis, based on technical analysis, based on fundamental events driving price, based on all these things. So if you're confused on any of this stuff or you want more information, you should be viewing more content on YouTube. You should be surfing Twitter. You should be digging in and getting your hands a little bit dirty while you're driving on the road or while you're out and about or you're studying or whatever you're doing with your life. Or instead of just like hopping on the video games and like trying to avoid it or forget about it or fall into drug use or whatever it ends up happening, there is an opportunity here for you as somebody who is just a regular person that's not making a lot to just put a little bit away. I'm talking like $50 or $100 and watch that turn into like $5,000 over the next couple of years, which could be enough to get you going. Like,
Oh, sure, man. Yeah, dude. I think about that too. So first off, we know for sure, as much as I would like everything to happen, right? We would like to make it clear to people we have no crystal ball. We don't know that it's actually going to happen. But I agree with you, right? You look at the past cycles. That's what you would think. And so, man, a whole bunch of things come to mind as you talk about this because. So one of the I appreciate what you're saying a lot because there's a wide range of knowledge that you need to be able to take this personal responsibility. In fact, there's probably almost too much knowledge out there to learn, and there's too many techniques. And of course, you get too far down the rabbit hole, you certainly start approaching trading and some other things, right? Because now you're trying to maximize. But all that being said, what you're describing, it's kind of funny, man. I think you know this already. It may not have been your intent. You've just described in a few minutes most of the points that Richard Hart had made for 2018 through launch of Hex and after about what people need to do to get ahead. And yeah, and if you're faced with an opportunity, for instance, of 100x, and I know everybody wants to get bloody rich and they want to have billions and millions and all that, but man, some of this money is life changing. In that, if you were able to capture 100x on $5,000, tell me that's not life changing. If you don't handle it right, yeah, I guess I'll screw up your life. But if you handle it correctly, that's life changing. And $5,000 is a lot of money for a lot of people, but it ain't that much in the U.S., right? Because most people, they can save if they put their nose to the grindstone $5,000 a year and get it invested in something. And with a chance of 100x, man, that's $500,000.
I know
Most
that
people.
one of the things that I ran into as a roadblock when I was making my way through all this was in the early days of crypto for me, I started with mining, and what excited me was the fact that I could legally print money
Yeah.
and create passive income.
That's
And
do you
and
like
that
you
was
like you ever play Monopoly, man? I'm just
oh, I
curious.
used to love Monopoly.
Yeah.
So as a kid, my brother, my uncle, my cousins, we would all get together up at the lake and we would play games of Monopoly that would last days. And there would
Yeah.
always come down to two players at the end of the game. And both players would be holding tens of thousands of dollars competing, and nobody would ever ultimately win the game because all you had to do was outlast your opponent.
Yeah. Yep.
This is a time game, and Monopoly will teach you that. I forget where my original point was now, but
I think you're going to say it's better to own hotels and have a stack of cash. I think that's what you're going to say.
yeah, I mean, assets are king, right? Because, well,
Yeah.
there's an interesting point. So every day that you hold dollars, the dollar gets debased in the form of inflation, money printing. It gets taxed when you receive it, when you pay for something, when you own something. The taxes are always there, so you're constantly getting dinged every time you try to make a transaction. And that's even true in crypto too. Every time you send something, there's a small tax in the form of a gas fee, for example. And those are just like, the means of doing business. But at least when I'm spending my ETH on a gas fee, that ETH has a chance of multiplying by 10 times over the next few years. Whereas if I'm holding a dollar since 1971, it's a guaranteed going to go down in value over time.
Mhm.
Guaranteed. So there's way more data there to look at that proves that that's a provable, truthful fact. I think, I guess, Maddie, what do you think about these things? Where is your mind at with this part of the conversation?
Yeah, I think that I think Hex is just so different from everything else that has come before it. I think it's going to take a lot for people to understand it. You know, and so just as a group of YouTubers, that has, been covering it in a really, decentralized manner, it's cool to be part of history, even if there are some parts of the history that are more exciting than others. A lot of people used to watch on Tuesday nights during the bull market, and that was, that was pretty exciting for people to see their predictions come true and to feel the euphoria of that part of the cycle.
Mhm.
I think that there's other positive things to observe in my own behavior and in other people's behavior during a bear market. Now is the time to tighten the belt and to realize, for me, based on how much I value Hex and value the value proposition of being able to send money to my future self, like, I think to myself, if I don't eat out one day, then that money that it would have cost to eat out or to buy a new pair of tennis shoes or something, that money, if I put it into Hex, and if Hex does well, that, in my mind, that could be 20x my money just to get to all-time highs again. And so being on a 95% dip is really bad for the immediate gratification side of things. But for the long-term player who values Hex and who understands the risks, that, hey, I mean, it's a miracle that any of this stuff works out. But the value proposition in my mind hasn't changed. It's improved. The APY that you get on the Hex that you lock, I mean, it's basically when you swap into Hex, like, now is the time when you decide, like, am I going to hold liquid, waiting for the price to go up and pay inflation? You get diluted because people who are time locking their Hex, they're getting paid all the inflation. And so, people who are holding liquid, and most people, I would say, like, have a combination of strategies for, and so, so I'm not saying everybody needs to be 100% staked, but just the idea that when you swap in, whatever the price you swapped in at, that if you time lock, you're gonna get that percent APY on the amount of Hex that you time locked at that time. So it's really, it can pay extra well to stake in a bear market. And to me, it's like, I've seen the price of Hex be so much higher than it is now. I'm willing to stake more than I was when the price was higher, because it's because I value Hex more than the current price. I value it being in the future and not being in the now, because
Yeah.
in the now, I know if the price of Hex starts doubling or doing a 10x, it'd be really hard for me to not sell my liquid Hex. And that's why I'm putting more of it in the future, is because that's part of the game that I'm playing.
Mhm. I think, it's not what I'm trying to relay to people is I can't give you a time frame of when Hex price is going to start doubling again consistently, but I can tell you that it will. And the reason why it will is because when you look at the chain and you see how many people are buying and how many people are selling, and the ineffectiveness of sellers now versus when we were at 20 cents or 30 cents or 40 cents, you're seeing a weakening in the sellers and a strengthening in the buyers. And eventually that pendulum flips. And then you start printing green candles. And that's when you get eyes from people that are outside the ecosystem. So we, the OGs, the big wallets, are going to set the bottom and start creating candles. And then the masses will start to come in. Hex has a history of making new all-time highs over and over and over and over and over. It just does that. And the reason why it does that is because it's a function of the liquidity pool and how that we trade this on a decentralized exchange. And this is all trackable on chain. When you look at the liquidity pools and you see that, currently we're sitting at about $11 million in the liquidity pools across all pairs. We are higher than we were in September of last year as we were running up from 11 cents to 50 cents, where we have more liquidity in the pools. That's what happens when a network accrues value and the value gets locked in the system. It's money that's not leaving the system. And even though the price is trading down 94, 95%, there's still organic adoption and money being filtered into the liquidity pools over time. So, if you want me to start screen sharing at any point, just tell me, and we can talk a little bit more in depth about what's happening in the pools right now and what's exciting about that. We can talk about what's going on in the macro. We can talk about what's going on in Bitcoin and ETH, because all these things are interrelated. And just talking about them and understanding them to a higher degree is going to give you more confidence in where you want to put your money in the future.
Yeah, I think.
Yeah, that sounds amazing.
Yeah, I was going to say I'd really like to see some of that background on how you're telling the difference between strength of buyers and sellers. And the reason I say that is I know I'm seeing a very strong uptick in activity this month, right? For a variety of reasons. But that's about as much information I have.
Okay. So there's a lot of data to go through. And I saw a comment earlier, which is from A-Bit Hex. He said, since the all-time high, we have onboarded more users than in the first 2 years. So if I just pull this up, it's called Metcalf's Law.
Mm-hmm. That would make sense, wouldn't it?
The definition of Metcalf's Law is it's used in computer networks and telecommunications to represent the value of a network. Metcalf's Law states that a network's impact is the square of the number of nodes in the network. For example, if a network has 10 nodes, its inherent value is 100, 10 times 10. The n nodes can be computer servers or connecting users. So every time that you double the amount of users, you 10 times the value of the network. So if I pull up on Hex Daily Stats, for example, or on hexfire.io, you can find these charts a lot of places. This is going to show you kind of the user growth over time. So we're currently sitting at 116,000 wallets that are staking. So we don't know if it's new users, if it's somebody managing somebody else's wallet. We don't know those specifics, but we do know that there's upticks in the activity, and it's been on a growth trend since its inception. You're getting more and more users, more and more wallets interacting. And then down here, you can see new stakers coming in. It's just, you get these constant spikes, and these spikes, when you compare the new stakers coming into what's happening on the price chart, what you'll find is that people chase pumps. New stakers come in when either new functionality comes out in the form of Hadron in the HSI system, or in the form of a price pump, people chase those things and stake because they need price to define value for them rather than looking at it the way it's supposed to be, which is seeing value in monetary policy and social consensus and the things that actually create value in something. The amount of whales in the system protecting price, those types of things. So we're seeing that. So Metcalf's law is basically saying that the price will catch up to the growth trend. Okay. And not only is that, it's going to compound against something called the T-share rate. And I know, like, obviously, all you guys in the chat that you're Hexicans, you've been here with us for years. Obviously, you guys understand this, but for people that are seeing this for the first time, most of the hate against the system is because they don't understand where the inflation comes from. And they don't understand why it's important. So if I pull up this chart here, and I know you guys have shown this on this before. Just do the base model. If everybody in the system currently ends their stake on time, the price of T-shares is going to go up by a factor of 5x. That's what this projection, this purple line is showing. So since the inception of the system, it was 10,000 hex to get a T-share. At that time, one T-share costed 60 cents. Nowadays, T-shares are somewhere between $600 and $700. So that new money that has to come in to acquire this constant immutable yield, you have to put more of it in to get the T-shares now. But when you lock it up, if you lock it up for longer terms, you get more yield. Thus, you protect price, but not being able to dump the price short term by delaying gratification, which then which makes this purple line go up even faster when you do come to end your stake in the future. And that whole time, you're going to accrue compound yield against price. We already know how hex price performs, and we'll go deep into that in a minute. So T-shares are the most important piece of this puzzle. And what this is saying is that essentially that a 5x increase in valuation is going to occur on T-shares over the next 15 years. That's a base. So the chances of us overshooting that target is very, very high probability. I don't know if you guys want to just add anything on T-shares before I come off that.
I mean, so T-shares are the primary use case for why somebody would buy Hex, in my opinion. Now, beyond just the people who are trading it. So all cryptocurrencies have the element of speculation, but the real value that I see in Hex, the reason why I use it is because locking longer pays better in Hex terms. If I value my wealth in Hex terms, then I get a larger share of the future compound interest based on how long I'm willing to lock. And this 15-year chart can be repeated a bunch of times over and over again. And it's the people who are staking longer that are going to have a greater share of the future compound interest. In order to not be diluted in Hex requires time locking for the average length or longer based on when your coins come out, which is somewhat known and somewhat unknown. But it's it's something that can be really shown how powerful it is to create greater scarcity of Hex by people. Some people are buying it in order to time lock it, and I think that's an important thing to like step back and think about is, there's always some person out there who's buying Hex in order to time lock it, and then there's a portion of people who are buying it for other reasons, like to trade it. But there's going to be a percentage of people who are time locking it.
Crispy, where's the part about deflationary T-shares? Is that in here?
Right there, top right.
This
Well,
one?
that one too. That'll show you the. That's going to show you the max theoretical T-shares. This particular panel, which is pretty cool.
Top right. This one. I just need a chart to basically show it.
Oh, okay. Yeah, that won't show you a chart here.
So this is showing you deflation. This is saying that every day that the amount of maximum T-shares that can be created goes down. And
I really like that.
And that's important because because a lot of anti-Hex crypto people, they always go back to the Bitcoin narrative. But one of the things that gives Bitcoin so much value is that it's limited in amount. It'll only ever print 21 million coins. And so thusly it's a deflationary system because every 4 years, less of it gets inflated out into the supply than the previous 4 years. So TShares work in the same way, as that they get rarer and they produce more yield the longer they're locked for. So it protects you if you get in earlier for longer by giving you more yield over time in the form of an exponential curve. And it ensures that people that buy TShares a year from now or 2 years from now will have to bring in more economic energy to purchase the same amount of shares, thus pushing the price up further against themselves in order to get a piece of that yield. And it may not be that important to 99% of us right now at when HEX is down 95%. But as the price starts to recover, it's going to become very apparent that many, many people missed the boat, and they're going to have to be forced to chase a more and more compoundingly expensive T-share.
Yeah, it's almost like different things can be true at the same time. So I agree with you 100% on what you just said, because of the deflationary effect. Some people hear what you just said and they go, "Oh, forget it, I already missed it." But I think I don't think that's the case, right? I think that T-shares also have the effect of this. Is me as a day one guy, I don't have all my stakes at Quattro Cinco, right? So they come out. I cannot keep my position. They come out. When my stakes end, I'm on the same playing field as everybody else for my new stakes. And so that always we kind of refer to that, one of the ways we refer to that is meat on the bone, right?
Mhm.
And so for anybody who immediately jumped to that conclusion, I'm saying no, that's not true, man. I mean, the math is there, so this is a continuous distribution to those who want to participate. But of course, the more you participate, the more you'll end up with T-share earning power.
So to add another layer to this, the question of, well, why wouldn't I just wait for price to start to perform, start buying, so I could see immediate USD price appreciation? Well, one of the reasons why you might want to buy now is because you don't want to, you might want to get these things cheaper, get them in now for longer. And not only that, when you're talking about strategizing around liquid hex versus staked hex, if you have portions of both, then you really are hedged in both directions, short term and long term. Ultimately, the most effective strategy in hex is to have some liquid hex and have some hex laddered out over time. I think if you're too weighted out too far, you're taking too much of a risk. If you're all liquid, you're getting what's the word I'm looking for? If you're holding all liquid, you're getting diluted every single day to all the guys that are staked. So ultimately, what you want to do is find out how much is my total amount of dollars that I want to put in over a time frame, let's say 6 months. And then you chop it up into portions, like maybe like 20% liquid, 20%, 5 years out, 20%, 10 years out, 20% out, 15 years out. Those are ways to think about the system. And then the big, fundamental event that's occurring that's, some know, some don't know, is that PulseChain is going to launch, and with it will come a second copy of everything that you did on this chain onto that new chain. And when we look at things like that do stock splits in legacy markets, like let's look at Tesla when it did its stock split. Let's look at what the price did on Tesla when there was a stock split, okay? Just for example. So I'm pretty sure it was like August 20th. Let's see here. What does it say? 12/14/2012. You can see just in this little green graph what price did. Let's go to 12/14/2012. Hold on. I just want to make sure that's the date. So there was a stock split for sure. And don't quote me on it. It happened sometime in this general time frame in the summer of this year. We'll go into a daily time frame. So they announced a stock split somewhere in here, and then the price ran up like 50%. over a 50-day period leading into the stock split. And then the asset gave you 1, 2, 3 times to exit in profit before there was the eventual sell-off due to macro conditions.
Hmm.
So getting in on a stock split, in quotes, aka a forked new version of Hex early, is not only going to double your bags, and different from a stock split here, which is you still have the same amount of economic energy up 50%, but in crypto terms, you're going to get a whole new asset with a whole new price chart. So the potential and opportunity there is a lot more variable and potentially even more than for this, for example. But stock splits are key to understanding what the fork could do for your bags. And so if you waited, like if PulseChain gets announced here and you don't buy until the day before the fork, well, then you're just basically buying late and like you're going to suffer. So, I mean, there's ways to play this event out and ways to think about this stuff too. And if you're a new participant, we need to be honest users of the system and admit that it costs a lot of gas money on Ethereum to end a stake. So when you're staking these things out for 5, 10, 15 years on Ethereum, be aware that you're going to need to have some savings in the form of Ethereum long term to end that stake eventually. But the thing is, based on my calculations and of the growth curve of this stuff, the money in the chest is going to be worth way more than the cost to end the stake, even if ETH trades at $15,000 to $20,000. So, for example, if I pull up the Ethereum chart, we can see that it's had an incredible performance over the last like 7 years since it's been out. 7, 8 years. Just go ahead and clean this chart up a little bit. If you take, let's use a tool called the Fibonacci extension tool to kind of see what's possible for as far as price action. So if you go to the bottom of the 2018 bear market, to the first peak in summer of 19 when you had your bear market top, sell the rally, to your second low, double bottom, Ethereum was capable of hitting the 2.618 target. And that's in green. So if we project out, we don't know when the bottom's coming for Ethereum, but let's be conservative with our estimate. Let's assume that it's not bottomed yet. And you can have your own opinions of it. Let's just assume it's not. So we'll do something like this. Because, by the way, there are more Ethereum wallets, more users, more utility, more coins being built on top of it, new forks coming out of it. It's the #1 EVM chain. This isn't going to be going away. This is a solid bet in crypto. And let's just take this as our low. So it's saying that if you got to the 2.618 again, you'd be looking at like a $25,000 Ethereum. So that means that the gas fees are going to compound against you in your stake by about 5,000%. Well, that's a concern. But there's 2 ways to look at that concern. Number 1 is law of diminishing returns. So typically, the way these things work is when you break the all-time high on assets, you don't go quite as high as the previous time. So for example, this time Ethereum went 390% past its all-time high. And this time it went 280%, so it lost about 100%. So let's say it loses another 100% off the all-time high. Only does 100% gain, 180. Well, then you're looking at only $11,500 Ethereum. So it doesn't look so bad. So what does that look like from the low? It looks like you're going to be 2,200% increase in gas fees in dollar terms. That's if you have to buy Ethereum here in July of 2025 to pay off your stake. That's why you want to be accumulating some Ethereum for your gas now while things are down. Sub 1,000 ETH is a fucking steal, in my opinion. If I'm looking at this chart, I'm thinking, okay, well, I can either get the Hex and then it'll compound and hold it liquid, and then I can trade it back into ETH when I need, and that Hex performance will overperform ETH. Well, why do I say that? Why would I want to keep my Hex liquid and not hold ETH? Well, let's look at the ETH versus Bitcoin chart, and we'll compare it to the Hex versus ETH chart. So if I pull up ETH versus Bitcoin, where are we at here? By the way, I've been showing this chart for a while, and it's probably one of the most compelling arguments I have for what HEX could do in the next cycle. So basically, this chart is what this chart shows you is how many Bitcoins can I buy with one Ethereum? That's what this chart is showing you. You can see in the early days of Ethereum that it just went up 7,600% in Bitcoin terms. And at the peak, it was trading at 0.15 Bitcoin you could get, not quite 0.2. You get 0.15 Bitcoins for an Ethereum from being worth from nothing. So if you were able to scoop up Ethereums for cheap down here, you could get many, many Bitcoins up here because that's like a 7,000% run off the bottom, for example. Or even from this triangle, it was a 1,200% run. So when it finally met its bottom, ETH has continued to outperform Bitcoin for thousands of days now, and it's holding as support inside of this rising channel. Well, there's ways to look at this. So first, let me just give you a little history lesson on how this played out. You got your bottom, and then HEX launches here in December of 2019, and Ethereum sees its first major markup in Bitcoin terms. Scoot ahead to next summer, Uniswap comes out in the spring, DeFi summer, new utility added, faster transactions, yada, 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 DeFi blows up. Ethereum continues to gain valuation against Bitcoin. This is telling me that people like innovations in technology. As time goes on, the bull market happens. People really start to begin to avoid the maxing Bitcoin narrative and start to really go chase the green candles. And all of these new NFTs and new projects are being built on top of Ethereum. And ever since then, even though things are looking bleak in the market, Ethereum's managed to hold its valuation against Bitcoin for 585 days.
Good job, Ethereum.
So go Ethereum, and go Hex, because Hex had a major hand in this move. And if you don't know that, or you just want to ignore that and act like Hex didn't make Uniswap popular and Hex didn't add huge amounts of value to Ethereum, you're delusional. Period. It did. It's proven. It did a 10,000x. Show me other coins that did that and paid you interest doing it. There aren't many. And so, well, why does this matter for Hex? Why would I want to hold liquid Hex over Ethereum? Well, let's pull up another chart. Why not? Let's pull up Hex versus ETH. So in the same way that Bitcoin is a store of value, and Ethereum is like the oil and gas industry that you run transactions on and you build stuff on top of it. Where am I looking at here? Hex. I want the full chart. I hope this is it. So too is Hex a store of value in the form of staked TShares against ETH, which is the oil, except they're just more closely tied together and they're easier to use. Now look at anybody who can see pattern recognition should look at this chart and see a similarity between these two charts. And I have it highlighted in the yellow circles. So just in the same way that ETH continued to build valuation against Bitcoin, but from a low to a high, to a falling wedge, to a breakdown, to a fake out breakdown, and then a regain in a secondary high, to a new low, and then continued to build valuation against Bitcoin for literally thousands of days. Hex bottomed in the beginning, made a second high, fought down through a falling wedge, broke out, made a new all-time high against Ethereum, and is now in a giant falling wedge once more, looking for a bottom inside of this wedge before it begins to build as a store of value valuation on the ETH network. So let's just be super bearish here. Let's say that it gets to the bottom of here, for example. And let me do this fresh so you guys can see. If let's say we're here on this chart, and I take that fractal, and I make it the same size, and then I cut it out, I put it in here. I'm pretty sure that this was a 400. How much was this? 480%, 430%, 446% from the low on ETH BTC to the high. So if we're looking at a 446%, that gets you roughly to this level. Okay. So that means that every, can't get this fractal to print. 1 second. Weird. Try refreshing. Actually, no, I'm going to stay on. Anyways, so let's say 446%. That means that even though it might never regain its full valuation against Ethereum, like say it stays down 50%, in the same way Bitcoin never, or ETH never gained that back against it. ETH never gained that back against Bitcoin either. It's still down 50%, but it's still increased in value by 446% over 831 days. So in dollar terms, what that means is that if you look at the dollar charts, Bitcoin did about 1900% in the last cycle, and ETH did roughly around 6,000%. So it's like a 2.25x more. So that you're going to basically effectively, if these patterns play out in the same way, you're going to capture 2.25x more Ethereum if you hold liquid hex from the bottom. Is the point. So you'll be, not only be so effectively you're compounding your returns in ETH as well. That's if this, if this, and I don't have a crystal ball, but just looking at these patterns, I mean, I'm seeing some similarities here amongst these two charts.
Yeah, I mean, I think there's also effect. There's a direct effect of Hart's law when two things are denominated in each other, they move together. But remember that it's not all just what's in the automated market maker on chain. Of course, that determines it much more directly. But even just if people are doing well in one coin and they value another coin, sometimes you're going to have, through individuals holding the same things, they're going to cause those markets to move together. And so that's another interesting thing. I mean, if we go back to the point of like, how did Hex perform against Ethereum? Ethereum never did a 10,000x in 656 days. It took Ethereum 2.5 years to do a 10,000x. And so Hex, having done that faster, only one other coin has been able to do it faster than Hex, and that was SHIB. And so it'll be curious to see like how it plays out again. A lot of people say that that there's really, well, I shouldn't say a lot of people, like it's actually a lesser known fact that I'm not sure if there's really been anything, maybe a handful or less of coins, maybe no coins have ever in a subsequent cycle against Bitcoin done a new all-time high. Like basically 2 cycles in a row done an all-time high against Bitcoin.
Mm-hmm.
Can you speak to that, Axis? Like do you know?
I mean, I'm sure that there's an example out there of a coin that did. But to me, just looking at what we have in front of us, I think Hex is poised with its tokenomics and with its diehard community to do just that. And like I think Hex can overperform this very fractal. I believe that. That's a belief that I have, that I hold because of my understanding of the system and the network participants and my understanding of like computer science theory, like Metcalf's law and the user adoption growth. And I mean, I can go on and on and on. But ultimately, the technicals are telling the story. So, like, let's just say we haven't bottomed yet. Okay, I'm going to say, like, let's say we see a 50% drop from here. So from 2.8 cents down to roughly a little over a penny. And then that's where we bottom finally. And that comes in January or February of next year. And then maybe, slowly Hex begins to gain its valuation back. Well, 446% off that level, somewhere in this general range. So it might not gain. I think the key here is that what is pointing out why you would want to hold Liquid Hex over Ethereum in the case of a portion of your bag that you can use as leverage to free future stakes. And this is not even going into the whole, you're going to get a copy on PulseChain. That Hex will also likely do well because it's the same code and the same participants. and that money that is over there that can be end staked for a much cheaper cost, we're talking pennies, that money can then be used also to free money on the ETH chain as well. And when I say free, what I mean is stakes that have been in the system for 2, 3, 4, 5, 10 years that's sitting behind a $10,000 end stake fee. Because that will happen to somebody someday. If a network adoption continues for Ethereum and it continues to accrue dollar value, which it will, at least in the short to mid-term. So you need to know all of these layers to the complexities of the game theory of the system so that you can be a winner in the system and you can capture the most yield that you can capture within your risk parameters and within the amount of allocated capital that you can give to the network. And this stuff isn't talked about enough because this is the stuff that advanced Hex users are thinking about. And it's not as easy as just saying, stake your Hex and delay gratification. There is a level of responsibility and thinking that needs to go into this stuff. But again, if you're getting in now and you're hedging your bets in both the distant future and the now, you should be protected across all time frames because ultimately time is value. And immutable monetary policy is value. And social consensus in a large bursting economy or community/economy is value, has value, transports value. These are the things that are driving this network. Not to mention the fact that it's backed by billionaires. That's helpful. So think more broadly about this thing and don't be so quick to dismiss it. A lot of us are Hexicans in here and we know a lot of this stuff. But for those that don't, you need to be a better salesman about why this is important to capture this now and how to do it properly.
One member of the audience says, this is one of your best streams, Maddie. Great conversation with super intelligent community members. Thank you. I agree. This conversation rocks.
McSlammin is slamming.
Appreciate.
So I want to, so Axis, I want to hear your candid criticism of the new blockchain product that I'm bringing to market. It'll actually be coming out sooner than you know. I mean, like the private testnet's going super well for something called Time Pays Me. And what Time Pays Me, how it started is I wanted a way to be able to time lock my PulseChain and PulseX tokens because that strategy has done so well for me when it comes to Hex. I am just like probably every person out there who starts to really have a lot of grief whenever you experience like your first 10x, your first 100x. It's really hard to hold on. And I had mastered the skill of like holding during dips and even accumulating in dips. But that was at the point when I had my life savings in Bitcoin, and I'm down 70%. And that's basically the point where Hex launched. And I had to really believe in my investment thesis. And so basically there have been a lot of changes because I have wanted to consider all the game theory that could go into Time Pays Me in order to, benefit people. I see time locking on the blockchain as a way for people to change their own behavior. And I find that to be an extremely important use case for Hex. And for me, it's something that's more important than money, is allowing people to be able to, let's say have a different user experience with this cycle of market emotions, right? Like if I throw the cycle of market emotions, if I throw that on the screen right now, you see people go from optimism to excitement to thrill, euphoria, then complacency. And as the price decreases, anxiety, denial, fear, panic, anger, depression. And then coming out of the low is when people start feeling hope, relief, and optimism. And then the cycle repeats over and over again. And so for me, Hex has made this bear market different than the last bear market I was in. And that's because of price appreciation that I was able to realize because of time locking, and because time locking gives me a different emotional experience. and a different behavior. And so,
Yeah. Yeah. I think
so,
these are some hugely important points. Yes.
So kind of just to give you a rundown and then to also update the audience, because it seems like every time I talk about time pays me, it's I've made a tweak to the game theory. Basically, I took out the incentive program, and there's no early payday anymore. Those were cool concepts, but the game theory didn't get nailed down all the way. And so what we have currently is it's a way for you to time lock any ERC or PRC20 token, and then it drips back to you, and the most frequently you can take the withdraw is weekly. And so this is a way for people to time lock, and my current thinking right now is that so this is kind of like an exclusive point, is the maximum length, I've revised that to 55 years, because I think if people are normally living till 76 and they're kind of like making their best adult decisions when they turn 21, then like that's exactly 55 years to save. And so while like many people will not choose to time lock 55 years with time pays me, the option is there. Now, in terms of a fee, I've gone back and forth on that concept too, because I really wanted it to be something where I'm not a middleman. I'm in crypto to be against middlemen. I also know from the SEC like breathing down my neck that that it also makes sense to have a little bit of fun. Like if people didn't donate to me, then I would have been at a loss for being a leader in the community, and like then being an unfair target of SEC overreach. Or you could look at it as it's only fair that people have watched 23 million minutes of my YouTube, that maybe it's okay that SEC like looks at my records, and they can they can see that I haven't been paid by anybody, and that there's no type of behavior here that you see everywhere else on YouTube outside of Hex, where people are paid to promote and then they pump and dump. All my addresses are going to show that nothing even close to that has ever occurred for me. So you can tell there was a big dilemma for me on like what the fee would be. And but what I ended up settling on now is like 1/10 of 1% fee, and either that would be like a constant, like it would be a set fee, or maybe we'll find a way to do like a sliding scale to where the longer you lock, the cheaper it is. Having 1/10 of a percent fee, it's like so small that most people wouldn't even consider how they wouldn't even consider it that big of a deal. But I mean, I think it's a big deal, and I think that it's just the right amount to where like it's not hurting people, but maybe it is nudging their behavior a little bit, or giving them a chance to contact the idea that that longer can be cheaper. Whether you look at longer is cheaper because there is an actual discount the longer you time lock, or if it's just because the more times you'd have to time lock, the more times you'd have to pay that 1/10 of a percent fee. And so kind of naturally built into it over a long enough timeline, people who time lock, for 3 years only once, versus every year for 3 years, the person who time locks for 3 years is paying less of a fee. But what do you guys think about that as a kind of, it's a much simpler version of what it was. And I guess for new people, it's self-custody. And so you go on chain in your MetaMask, you go to our smart contract factory and you mint your own time pays me vault. And then that vault allows you to hold your own keys while you're time locking your coins.
Mm-hmm. So I have a couple comments, and we'll get to that at the end. I guess basically the number one most valuable function of this contract to me is that if your account becomes compromised, that there is a failsafe in there that you can retrieve your funds before somebody else can pull them off. That is a function, correct?
So that's still planned to be put in. I've been leaning more towards like not advertising that as heavily, just because I want to attract people who, you know, I'm pretty sure that all the OGs in the space, like they're gonna know what's up, and then I want to focus also the getting the word out to people who aren't already in the Hex ecosystem. But yeah, it's basically, it's a way where in many cases, if there's been a hack, there's kind of a way to undo it, and that sounds pretty far-fetched at first, but you know, basically how it works is, because you're willing to wait a week anyway, because it's a time locking utility, because you're willing to wait a whole week, that kind of gives a window in which if somebody makes a withdrawal request, you could get notified of that. And so if somebody had gotten your private keys, that'd be a situation where you would really hope that when you set up the vault, you went to the advanced features and you put in a pre-selected recovery address. For me, I would do that. I would use my cold storage seed words. Well, not the seed words, but the actual address of the cold storage. I would use that as the recovery address in
Sure.
when I'm setting up the vault. And I've even
That's a massively
enthusiastic.
valuable functionality, honestly. Like I
I think
think
so,
that's so
yeah.
key.
Because the ownership of the vault, the code can be written so that the ownership of the vault, which is a smart contract, the ownership of that changes to the recovery address in the event that the user goes in and, you know, basically flips a switch in our interface to say that they think they've been hacked. And so yeah, so in addition to the drip system, we really thought through this really carefully and realized that this would be an advantage for people. And I've even said that that I'm going to take $10,000 worth of my Pulse points and put them in a time pays me vault, and then read the seed words off on a live stream, because I will be
You're that
able to
confident
change
and
the
that
ownership.
that you're that
Yeah.
confident. You're just it's a proof of concept.
Well,
And so that's
it'll be like probably like what, like a third or a fourth audit kind of, because like it becomes like a bounty basically.
Well, I
And
think that's such a great
yeah.
incentive to do this in the first place. To me, that is so invaluable, and there's so many accounts that have large stakes on them that, in hex terms, that have been compromised or had issues or lost words, or stuff happens over
Yes.
long time frames, and this is just another way to protect yourself from yourself or from opposition. So I think that's huge. And then, so to also with that, maybe a more basic concept of another reason why you'd like this functionality would be, like, let's look at the Ethereum chart. You had to hold 826 days in order to capture 274,000% price appreciation. Or from the bear market low of the previous cycle, you had to hold for over 1,000 days to capture the most price appreciation. And so what this does effectively is it keeps you from selling yourself short. And this is the kinds of moves that you get in crypto. If you look at HEX, that's another great example of a coin that did huge returns. I'll just do some arbitrary low point to the top. I mean, obviously we all know it did the 10,000x. And if you would have sold yourself short by not locking up some of your funds, not hedging your bets into the future, you would have missed life-changing opportunities. And so I think one of the great arguments for why you'd even use this in the first place is both security and save you from yourself.
Yeah, totally. And I mean, I think people will have to check back and see what the final version is that's launched and what the actual benefits are of that. I think, yeah, the security part might end up being way more popular than I predict. Because you can time lock Ethereum itself in time pays me, and so I really see it as something where hopefully the more popular the more popular time locking can be. But also remember, there are some people who will not try Hex because they don't understand even a component of it. They don't have any experience saving money for long periods of time because the money is being devalued by governments. People don't have any concept of investing in cryptocurrency because it has such high volatility. They don't put together the concept that that the time locking is advantageous in conditions where you have massive dips and you want to make sure that you're not getting funded out during those times. Hex has APY that people don't understand, and in these days the majority of APY things in crypto are scams. Hex is not. Hex is very much different and truly revolutionary in that regard, but a lot of people misunderstand that. And so for me, a great hope of mine is that with Time Pays Me just being a simple staking and dripping situation, it'll allow people to continue. It'll allow people to experience a component of Hex, the time locking part, to see how it can be good for them, and then maybe they'll be ready to have the discussion about getting APY from Hex once they realize that time locking is safe and advantageous.
Yeah, so then I wanted to touch on the fee part. A couple questions, like where so the fees are, number one, they're there to prevent you from over pulling funds in and out, right?
I mean, it's so there is a component of
and I guess ultimately, where do the fees go to? And
so
does the user class reap the rewards of those fees?
No, it's just it goes to the creators for creating it. And so if you think about it, if it's 1/10 of 1%, then that's $1 for every $1,000 that somebody's locking.
I mean, the number can be arbitrary, but I think I want to look at it more from an angle of where's the value proposition for me? And we kind of pointed those things out already: security and saves you from yourself. But are people willing to pay that price for those two functions? If there was a third function where they did receive a yield, or they did receive some form of something else, it could be something that nobody's thought of yet. But if there was one other third leg of the tripod of value that you can add to that contract, I think it would really go.
Yeah, I mean, we have some really cool ideas, and for now, I think
just off the top, I'm going to be blunt because I'm always that way.
Sure.
Obviously, tax coins or extra fees are never welcomed. They're just not. I mean, nobody likes getting paying more than what they have to. But if there was some sort of an incentive, like you were saying before, or some sort of right now the incentive is you're getting extra security, you're paying for extra security, and you're paying to save you from selling yourself short, essentially.
You also get kind of like an automatic ladder because it's dripping back to you based on the amount of time that you've served. And so, I would probably say, if I was talking about like a 1% fee, that would be something where, people don't like tax coins and people don't like, that kind of thing. But in this case, it's like, if it's most people
my argument is
most people are not sending money to their future self cheaper than $1 per $1,000 because just of the gas fees that's involved with being able to do a stake weekly for any period.
I think it's important to identify where the value, why you pay the fee, and why you have to pay anything, and it is basically for those two functionalities. That's the most important thing. Is that's why you're paying any fee. But I also think people would pay more of a fee if the class of users also had some reward for doing so. So let's say it was 1%, and 50% of the 0.5%, went back to the time locker class. Half would go back to them and half would go to the founder, or 0.1% would go to the founder and 0.9% would be evenly distributed amongst that class based on the amount of time in the future that they locked. So if you lock for much longer than everybody else, you're going to reap more of that 0.9%. for example. It gets you more eager to lock for longer, and also people are more comfortable paying a fee at all if there is an incentive system built in. And then you
I
can
think,
compound that with the
yeah.
security model and with the other factor of just, you're protecting yourself.
Yeah, I think like incentives, that's the feedback that I got before when I talked to about literally 100 people in the space. That was the main feedback I got, was like, build in incentives. And my reaction originally was, the incentives they're already built in. It's like, it's
Yeah, but by paying you
longer pays
more,
better normally.
but by paying people a percentage of those fees to go longer and help themselves for longer, you're not going to get people to make that decision on their own unless you give them a reason.
Well, Hex already does that.
I know, but I'm just saying, like, you're not competing with Hex by doing that. You're adopting the same game theory.
I think some people would argue with that it would be competing.
But you're
And
not, because
yeah.
you're allowing any ERC20, and Hex is only its own contract. So it's a totally analogous system that runs in parallel with Hex. Because you're not going to make 27% APY on a 15-year time lock stake like you will with Hex. You're not competing with them, because the 1% isn't enough to make people stop staking Hex for longer. It pays better to come over to, because you're not going to be paying people that high APY. So you're teaching them the mechanism, but you're not encouraging them to stop staking Hex.
Yeah, I mean, like, Hex, it's already attracted all these people who understand the value proposition of longer pays better and getting trustless yield. So for me, I started developing something that looks a lot like what I have now. Then I kept refining it further and further to the point where it looked very much like Hex. And then I had to take a step back and like, kind of realize, well, just for me, I don't want to betray like the thing that set me financially free.
No, if anything,
And yeah.
doing that is encouraging people to stake Hex. You're teaching them how to do it without pulling them away from the higher APY, if that makes sense. Because you're teaching people that don't want to deal with Hex, because this is all about non-hexagons, essentially. This is about bringing more people into the world of time locking. Above everything else, this is about user adoption and bringing in new users into crypto in a safe and effective way. And so what you're doing by making a small incentive is you're convincing them that maybe make them think somebody who would only time lock for 3 years, if they knew that if they time lock for 10 years, at least they're getting a little bit more, instead. And then they can learn that system. And then eventually they're gonna be like, well, this APY sucks ass. And then they're gonna go over to Hex. You know what I mean? It's like, it's just the way people think. It's like cause and effect. That's my
I think
opinion.
there's different ways. Yeah, I think there's different ways that could play out. And I think that that really, if you concentrate more people who understand that you don't need APY in order, because basically the APY is just one layer that you transfer economic energy into, or like you redistribute, right? People who are time locked always say like, oh, I'm buying the dip without buying it because I'm printing more Hex faster than the Hex is being diluted when I'm time locked longer than the average. So that system is I think really beautiful and is the innovator in that regard. I think that so it's kind of hard for me to do something that would replicate it, because I think it kind of goes against like the values in some regard. But I'm taking in what you're saying, and I'm I'm continuing to consider where I'm going to land on this. But I think that just in terms of people being able
How
to
about
time
this
lock
instead?
something,
What if
yeah.
the farther you stake out, the dripping is an exponential curve, so that it may initially the drip is small, but as time goes on, the drip gets more and more and more of your account.
That's certainly a way that people like to set up their ladders. Either like having more further out or less further out because they expect it to appreciate more over time.
Mhm.
And so that's something that maybe could be built into, this series of experiments or whatever
Mhm.
that people are doing.
Just trying to think about other ways to
With
get
time
people
locking.
past. There's going to be a group of people that will not time lock because they're like, they feel comfortable with whatever security system that they have set up,
Mm.
and so then so they're and then really the lasting value prop for it is to save you from yourself. And so that's for
Yeah.
people that
Yeah.
are scared to manage their own money, which you don't want people to retreat into something because they're scared to manage their own money. You want people to be comfortable managing their own money. So it ultimately comes on the question of what am I teaching my user?
Yeah, yeah, and I think like one way that I might use time pays me would be even something as simple as time locking, let's say USDC for 6 months, so that I know that I'll have this amount of money each week that I can buy the dip of what I'm predicting is going to be, a certain period of a bear market, or
Mhm.
to put myself on a fixed income to be able to get that paycheck every week and that's denominated in something, at least for my short-term savings, that might be useful to me. For my long-term savings, that would be actually the opposite of what I would want
Yeah.
to do or recommend because of inflation, because of just the risk of USDC not being true crypto itself.
Yeah,
And
man, that's
I'm
a can of
excited.
worms. It's so
Yeah,
exciting. There's a lot of different ways to think about it. But I guess, I'm excited to see what you come up with, and I support you
thanks.
in whatever you want to accomplish in this world. You're a great asset to the
I
community, and
appreciate it.
I think, let's just see where this ride takes us. When I look at just, when I go back to what I'm best at, which is price charts, and I look at, where Hex can go, it makes me very, very excited for the future. You know, but
Yes.
so I don't know. I
And
got
if
a
and
little.
if other people, yeah, yeah, if other people have feedback for me about time pays me, you can. There's actually the old name of the project is Smart Vault Me. And if you go to the Telegram t.me/Smart Vault Me, from time to time I open a thread where people can give me feedback on what you're thinking about these different game theory and design decisions, and then I find that really useful. So thanks to everybody who's been doing that. um, yeah, so what is the next topic of interest here?
Well, I guess I got like just a few minutes left before I gotta catch a plane. But I guess I don't know. Do you guys want to just we've touched on we haven't really done a lot of like you know I would like to like basically give people some price projections because
Cool.
people talk about what Hex can do in the future, and really ultimately when you're doing technical analysis on a chart, it's good to look into the past to kind of see what it can do in the future. And so I guess like what we could just do like a quick little analysis. I know that maybe people would like that. So
Oh, totally. Yeah,
so
please.
let's pull up and by the way, these things are volatile and they have a mind of their own because we're all active participants in these networks.
Mm.
Um but let's just go with the Hex chart, right? So in the beginning, Hex dropped 99% and it went from a
Ouch.
valuation and we'll use the fib extension tool again to try to figure out from the low to the first major high and then back to the low. Whoops, wrong tool. Um, fib extension. Where are we at? From the very first low to the first high, and then to the second major low, which was a wick low back in March of 2020. Price was able to reach roughly the 2.618 level, and you can see that here in green. That was a huge move percentage wise from the low to the top. Looking at 10,800% in 130 days. So the point here is that when Hex moves, it moves fast, and we have evidence that it's already once hit the 2.618 level. So if we extrapolate that out to the big payday run up, which was another anomalous big run up on the chart, and you go from the pre-big payday run up low to the peak of the high, and then to the second low right thereafter. Once again, Hex was able to recover the 2.618 level, and it actually overperformed it by roughly 45% when it hit its 10,000x target. And it held that price for 42 days. So, we could extrapolate out that, Hex has already done it twice. Is it possible for Hex to once again hit its 2.618 target? But in order to do that, we have to make some assumptions about where price could go in the short term. So if I take this fractal and from what's already happened once before, and let's be conservative and say that we have not yet hit our bottom. I know whether that has happened or not. I have no crystal ball. I don't know that for sure. But if we roughly hit our bottom sometime by spring of next year, let's say, and then we use our fractal to go from the low to the high to the low. The 2.618 target's got you somewhere roughly around that $1.36 level. If you account for diminishing returns, maybe you take off a percentage, but in the past, Hex has pumped, on the second time, it pumped past that level based on its big payday move. So Hex has done this before. That would be, if you're looking at this from technicals perspective, that's a target that likely will be tried to hit in the next bull run. Time frame subject to change. But as we all know, you can spend many, many years down, 80, 90%, and then work our way out and test the all-time high. And then in 3 months, you can see many, many multiples. That's just how crypto moves. So, some people might say, well, that's not the kind of performance I was looking for. But I mean, just to that level, that's a 7,600% move. And no, that would mean all-time highs against Ethereum and Bitcoin. That would mean a lot of things. So just like some way to think about this when you're strategizing, how you want to play this out over the next few years. Of course, price can go up, price can go down, but the T-share will always go up. And so thus the system users, the social consensus, some things that we've touched on already in the talk, that stuff's here to stay. And it's going to be an exciting bull run.
Yeah.
One other thing, when you look at the liquidity, I'm going to take this out, pull it over to here, try to show you. So I've shown liquidity on a lot of other streams and kind of explained how it works.
Is this V2 liquidity that we're looking at?
This is V3. So, but the point I want to make here is that liquidity is currently in a squeeze. This is called a pennant. And so Hex is gearing up for a major move, up or down. I'm not sure which direction this is going to go in, but we're in an uptrend. And the last time we had this kind of an angle is the lower green line there was back in last year. And when you had that sort of it's like a 45-degree angle here, obviously this was in an uptrend of its own. When that squeeze happened, you had a parabolic run up in liquidity. Now, I'm not saying that that's going to happen tomorrow or anything like that. I'm just saying that when these types of triangles form and this is happening in the liquidity, it's saying that a squeeze is coming. So when we go back and we look at, we haven't been at these levels. So there's about $11 million of liquidity in the pool amongst all the pools, and most of it's in the USDC pool, and then another 10 million roughly is in the USDC pool, and 5 million roughly is in the Hex ETH pool. But there's only $2 million, I'm pretty sure, inside of. So we haven't been here since last September, right before the run up, as I was saying earlier in the stream. When you zoom in on the Hex USDC liquidity, what you'll notice is every time, I'm going to try to take you through the game theory of what a market maker was thinking. So
Please.
every time that the volume trends down, then you see a liquidity injection in the form of a spike. So if I copy this out, I know it's kind of funky, but you'll see here the same sort of trend in volume. As volume trends down, you get these spikes of liquidity that is usually signifies a big move in one direction or the other. So you can see that currently, Hex price is near the lows and volume is trended down to the lows. So in order to keep interest in the asset, market makers and liquidity providers have to create interest in the asset. So you either have to move price down to make people come back in and be interested to buy, or big wallets need to come in and inject liquidity into the system in the form of USDC in this case to make the price go up, to make people chase, to be interested in the asset again. And, because of what we know about the asset and how long it's been around and its price performance historically and the amount of accumulation that's occurring, it's safe to say that a big move is gearing up, and that if there's $2 million of USDC in there and you put 2 million back in on one market buy, that it's going to shift price up drastically. Now, if there was $10 million in there, it would take 10 million more dollars to make the price move. But right now, there's so little USDC liquidity in the pools that the price is going to get more volatile as we reach our bottom. And once those volatility settles down, the price will be much higher essentially at the end of this whole thing when you finally do bottom. When it comes out of its falling wedge here, this squeeze that's happening on this 3-day hex chart, once it finally does get out of here, it's going to move up quickly and hold a floor, just as a function of there won't be enough sell pressure left. As you can see, as time has went on, volatility has decreased. Volatility really decreased here between September 15th and October 19th, and that's when you saw a large pump from a few big wallets. And even though the price reverted to the mean of this downtrend, it's still, basically the same price in penny terms, and just slowly crabbing along. And these are when markets get quiet like this and volume is at its lowest, is the best times to buy assets, because you're basically front running the volume injection that's coming from long-term believers.
Beautiful.
So this is all bullish, and things to keep in mind. You can see up at the top I have is a 240-day cycle from the all-time high to the first major breakdown of the 10-cent level. So I just extrapolated that out, and we're coming up on the end of another 242-day cycle.
I've had a question.
Yeah.
Hey, so this is probably a little bit off topic for what you're looking at right now, but can you next just comment on the whole, buyers being stronger than sellers aspect?
Sure. Well, the main thing to think about here is that when you look at nomics and you look at the volume that's occurred on the asset over the last year, you've seen, by the way, 91% of all of the volume is transparent on chain. That's 91%. It's got a
That's
grade A
awesome.
rating from nomics. So that means that this $5 billion that's went through the system over the last year has been 91% of that is on-chain, verifiable proof, USDC being swapped for Hex, ETH being swapped for Hex, and back and forth. And so even though we've seen this number was actually 6 billion a month ago. So it's trending down now, right? So yeah, the amount of dollars, the amount of economic energy coming into Hex has slowed, and that's proven by the fact that about a month ago there was 6 billion of volume traded over the last year. That's just coming off the bull market high. But just that much economic energy has traded hands in the system is telling me that there is a huge demand, and it's just a function of the big bags exiting from insane returns and trying to live off the interest that has pushed the price down. But that in almost an equal amount of or dollars has come back in. So billions of dollars billions of economic energy has come in, and billions of economic energy has come out, and it's most of it, 91% of it's all on-chain transparent, and it's real asset for asset. It's not paper traded like Bitcoin. It's not derivatives. It's none of that shit. It's legit trading. Like, you have a fur coat. I want to give you this iron pan for it so you can eat, and I want to be warm. That's the equivalent. This is a commodity being traded on chain. So it's amazing because that's true numbers that you're seeing. $6 billion as of last month. So now you're seeing a roughly just short of 5 billion. So that's the number one thing, is like just how much economic energy is traded hands between the OGs that were selling and the new users coming in and the coins that are getting redistributed. And then the second part of that is that when you look at this metric here on the right, the buys and the sells, in any given day, even when price is trending down, there's more buys coming in than sells, even if price is going down, which means that few hands are redistributing to many hands, which is long-term bullish for price because it spreads the T-shares out thinner over many more users, and it creates an investor class, a new entrepreneurial class of users that continues to purchase on a regular basis and takes away from the few and redistributes it to the many. Hope that answers
I love it.
All right, thanks.
Yes, sir. So, I don't know if you guys wanted to maybe get ready to wrap it, or at least I'll have to dip pretty soon here. Got like a few minutes left.
Crispy, what do you think?
Yeah, I've got a couple things to
Sure.
talk about, but nothing that we have to do tonight.
Okay. Yeah, I'd like to hear what you have to present this week. And another thing that I'll go ahead and plug is I just did the blog post for hexconference.com 2023. Rapidly approaching, in less than a month, is the 3rd annual online Hex Conference. It'll be January 6th through 9th at about the time that this show starts. It'll be actually about a half an hour earlier. So that's 5 p.m. Pacific, 7 Central, 8 p.m. Eastern, and it's plus 1 day at 1 a.m. UTC time. And so it'll be 4 nights. It's a Friday, Saturday, Sunday, and Monday this year. Same dates as the last 2 years, in fact. And Richard Hart will speak as usual on the 4th day, 4th and final night. And so that's a rare occurrence where we know a time in the future when Richard will be speaking. Something to look forward to, certainly. Good. And this will be an event that's free, and it's something that I don't take sponsorships for, because I don't take sponsorships. So, hexconference.com. The website might have updated to this year's blog post, or it might still be redirecting. Yeah, it's still redirecting to the old one. But if you go to my Medium, you'll be able to see that, and then probably in a day or so, then the hexconference.com link will work. I'll be posting about it on Twitter, and I will also, now's the point where I can send everybody a message to invite them. People who seem to still be going strong in the bear market in terms of creating content, and anybody who's spoken at the previous Hex conferences is very welcome to join in the festivities, because last time we had, I guess it was about 100 people. Well, there were over 100 spots, and there were about well over 85 people. There were maybe a little bit less than 90 people who participated, and so that's showing the strength of this decentralized community for sure. Is it? Oh, I didn't pin it. It's not pinned. You might have to scroll down to the ones that are not pinned. I just hit I hit the publish button just seconds before going live here.
Yeah, so here it is, everyone.
Yeah, it's just it doesn't have the final schedule yet because I haven't gotten the invitations out yet, but that'll be coming tomorrow.
By the way, everyone who's, I mean, if there's anybody new in here, I'm sure, you know, most of us are been here for a while, but for those who haven't, what made me go public was with my opinions on this whole crazy experiment called Hex, was seeing the first January 6th conference in 2021. That
awesome.
That was listening to the Germans talk about TShares and payouts and stuff changed my entire view of the system. Even though Wales Only and myself were figuring that stuff out on our own, it was validation, and it made me very interested in the ecosystem even further. So
that's so cool.
Yeah,
I'm excited to have you as a speaker this year. Yeah,
for sure. And then just a couple other things before we take off. Some exciting stuff that I've been posting on Twitter. Well, check this out. Anybody that can see a pattern can see that Hex is basically performing very similarly to the way Ethereum performed, just by the shape of the
Wow.
chart. So it's getting down
Look at
there.
that.
Like the amount of downside is limited, but the amount of upside when you come out of this bear market, it's gonna be nice. It's gonna be juicy. So be prepared for that. And then this chart did really well. This chart has been seen by over 40,000 tweeters, and it's a cool
Wow.
chart. You know, it's speculative. It's conjecture. It's all these things. But what you have in orange is the Bitcoin chart, and then in pink is the Hex chart. And if you take Bitcoin's fractal price action from basically this point here, which was near the bottom of its first major bear market cycle, and you extrapolate it over to Hex, if Hex were to perform similarly to Bitcoin in that way, you can see kind of the price trajectory over the next, 10, 15 years. And then if, I'm not saying Bitcoin will perform in this way, but if it does have a similar rebound as to the 2015 to 2017 bull market cycle, if it does, you could see this kind of action on it. Now, I'm not saying that'll happen for either coin, but I'm just saying it's juicy to look at. It's exciting to look at. And even if you did a factor of 10 less good over that many years, it's still a pretty good investment. So
It's in the realm of possibility.
Oh yeah, another thing is January I'll be coming out with accessalive.com. So check out for that. We're myself and my partner and my my accomplice the contrarian, who's been in markets for almost 40 years trading commodities and managing the risk side of the portfolio at the Chicago Board of Exchange, have come together to team up. The old boys and the young guns are coming together, and we're going to be educating people on technical analysis, fundamental analysis, macro markets, cryptocurrency, and all the above. So that's coming in January on so accesslive.com. So be on the lookout for that as well.
Nice.
Awesome.
Thank you very much, guys. I really appreciate this conversation. It's been good, and I'll come back in the future, and hopefully Crispy can get more opportunities to speak.
Yeah, we're excited, man. I'm glad you came.
For sure.
That sounds great. Thank you so much for being our guest tonight, Access Live. And everybody go follow Access Live on YouTube and Twitter and everywhere else.
Thanks, man. Appreciate you guys.
Yeah.
Don't get tired with all that flying, man.
All right. Noted.
So I think Crispy and I'll keep streaming for just a little bit longer to show what he's prepared. But yeah, thanks for joining us.
Thank you, guys. Cheers, cheers,
Talk
chat.
again soon.
Yep. Goodbye.
See you, buddy. So more candy than anything else, Maddie. But one of the observations I made today is I'm calling it end of year. I think we will hit 5,555 hex per TShare paid since the launch of Hex.
Whoa.
And it may happen right on, as chance may have it, the math works out, it may happen right around New Year's Eve.
Wow. Wouldn't that be something?
That might be a special stream. I don't know.
Yeah, definitely. I remember almost 2 years ago now was the first like big Hexagon New Year's Eve. Well, I guess it was the second one, but
no,
the first one that was streamed.
Yeah, we went up to that 1%, or excuse me, 1 cent again.
Yeah.
For New Year's.
That was so exciting.
It was very exciting. Like nobody cared that it went back down.
Yeah.
I'm right, because we knew, we were all excited and we were buying. So yeah, I mean, kind of that point, that was right just below 1, and then just after New Year's, it was over 1 for a little bit. And we took a bath for a little bit of time, I think it was only a month or so, but before we started coming back up. So that's one big thing. Another thing to throw out there, if I share, is that okay?
Yes.
So I'll just share a quick screen. So you should be seeing the total TShares chart for this year.
There we go.
Right. And so I think a lot of us are pretty familiar with the TShares and how they change based on staking behavior. But as we come here to the end of the year, we are seeing, and this is pretty natural, right? I mean that more TShares are typically ended than are created. You know, sometimes that flips around. But in any case, what that ends up creating is this deflationary effect on TShares, which can only be countered by more HEX being staked than is coming out. And so we're hovering right around, 10.25, 10.26 right now. It's also likely that we'll see that drop maybe another 100,000 before now in the end of the year. And I hypothesize if that was to happen, we may, maybe permanently, or at least for the near term, be over 6.3 per hex per t-share as base without penalties.
Wow.
Yeah, so that's been coming up pretty good. And then we have our payouts chart. We've been able to watch this and see what the averages are. In this 180-day moving average has been coming up pretty strongly.
That's a really nice chart. I like how that looks.
Yeah, it's more it's more moon math, moon candy. I brought it down to 25 because in theory, right, if we stick to a 4-year type cycle, then most people be pretty interested what's happening 24, 25. But also because otherwise the moon math is crazy, right? When you start looking at it. But that might be that at that point in the cycle will be above 10. Maybe it'll be a little less than that. We shall see. Maybe it'll be a little bit more than that. But the reason I kind of go there is because when we go all the way out Quattro Cinco, or thereabouts, we start getting way up there, right? And so from a moon math perspective, it will scare everybody away,
How much is that for the people not watching the screen?
Oh yeah. And this is just math, so we don't know what actually will happen, but based on what we've seen in terms of share rate going up and how people have been staking, that's about 29.3 or 30 at Quattro Cinco.
Well, and if a t-share is 10 times more expensive in hex terms, it would figure that it would pay out more in hex terms as the entire supply of hex goes through its first full 15-year cycle.
Yeah, it's funny how that works, huh?
Yeah.
All this math is related back and forth to each other. One of the other things that we've been seeing, and that's why I was asking Access about that question, is our activity. These are wallets with activity on Hex, and so it's a little busy chart. And actually, from talking with Access, I'll probably put some buttons in here to turn these on and off so people can look at different things. But basically, what it's showing is our average for 30, 60, 90, 180 days in 1 year, the number of wallets per day. And that we've had some huge uptake here, some right around the beginning of October-ish, end of October, beginning of November, up to 900 wallets a day moving on average. And this is the last 30 days rolling average.
How much of those are HSI?
Well, this is wallets having to do with Hex, so it's not staking. It's just that people are doing things with Hex. But to answer your question, which might be useful,
so that's up. Those are big numbers then.
Oh yeah, this is just. Yeah, I'm sorry, I changed the screen. This is when we're looking at that particular chart. The activity chart. These are wallets that have done a transaction with Hex.
I mean, even back in like, was it May or somewhere around then, it seemed like wasn't the number of new Hex users and the number of stakers only going up by like 30 or 50 per day, something
Yeah.
like that.
Yeah.
So it got down and now it's getting back up.
The total activity is up, yeah, because we were down around 369. If at the bottom of that, it looks like about 320 on average for a 30-day. And we're about 3 times more activity since May.
Wow.
Now, there's a lot that can be accounted for that, right?
Okay.
You know, I'm still trying to dig into exactly why this is the case, but we have a large number of stakes coming out, and so that means if you were to unstake, that's a transaction; it gets counted. If you were to restake, that's a transaction; it gets counted. If you move it to a different wallet, that's a transaction. If it's a swap or trade, that's a transaction. So it's just an indicator of a lot more activity than we've seen in the past.
Yeah.
You know, and it's been trending up, you know, in general over this particular year. So
Cool.
pretty interesting that that's been the case. Now, to your question, um, so since you mentioned HSIs, I'm going over to the staking chart. There's some new things up here that I've put in. I've added some additional data and filters. So if people do have HSI stakes, um, the HSI stake, which is a Hadron staking interest instance, those do have a staking address, but it's a contract address. So people find some difficulty in finding that information. So I've added a new filter up here, so you can actually just put your owner address in. So if you have an address with multiple HSIs or even tokenized HSIs, they'll show up here by using that filter. And then if you wanted to see how many HSIs were here, you could hit the true button for HSI and see how many exist. And there's currently, according to the information I have, so HSI is true and not ended, about 16,400 of those. So a small portion, you know, to be sure, of our overall stakes, but a pretty good number.
Something like 10%, somewhere in that order of magnitude.
Yeah, maybe a little bit less because we have 424,000 open stakes. I guess I could throw the GA off, maybe change that a little bit. We still have pretty good amount, I think. So 423,278 open stakes in total. So not quite 10%, right?
Okay,
Yeah.
I was going off of the number of staking addresses that also basically what Hex Daily Stats shows is not broken down by individual stakes, although Hadron instances have a new address for every stake, basically.
Right. Yeah. So yes, a little bit of an apples and oranges comparison, but yes, yeah, I get your point. So if you're looking at something like 113,000, then 16,000
yeah,
might be something like 10%.
yeah.
Yeah.
Total stakers right now on Hex Daily Stats is 147,000. I used to check that number a lot more often.
Yeah.
Cool to see it
And
going up even without the HSIs.
Yep.
Like 130.
Now I don't have a chart up that actually shows HSI creation, but it has been on a downtrend. I think that's to be expected. You know, so we can look, for instance, at start dates of 11/12/2022 through the present, and you know, just go grab the HSIs. So 662 HSIs have been created. and up approximately the last month. But
Okay.
overall, we've had 13,673 stakes. So again, yeah, I haven't done the percentages on that, but a smaller percentage.
So that's like 20 a day for the past month.
Yeah,
If it's
something of
600.
something
Yeah.
of that nature. But they're going through the auction process right now, and there's a lot of things changing with prices, and it is the bear, et cetera, et cetera. The other thing for stakers who are interested in it, you can come over and look at your mintable Hadron. Now I have that on here, so you can pick your address and see what's mintable. I think I actually have another panel we can go look at, but I would remind people that, free airdrops are part of the game, and you do have an opportunity to do what you want to do with that. And, that's, in some cases, I get it that they're, mintable Hadron might not be valuable enough to match the gas, right? Depending on the stake that's out there, but you can look at that and see.
Very cool. Very cool to be able to see that.
Yeah, so you can do that kind of stuff. Of course, these numbers are fairly low because I put this filter on. This is another interesting thing that's kind of cool. We can throw out there. So there are some big addresses like OA addresses and whatnot that have quite a bit. But there are other addresses that are not OA addresses. Let's do no owner stuff. And that'll update here in a second. But there are some people with some pretty hefty amounts that are there that they could be minting, but also some of them have, depending on whether they did bonuses or not, they might not have taken part.
Crypto Ewok has a question.
Oop, yeah, I'm on a
that
different
note.
screen. You probably don't want to see that. Okay, go ahead. You tell me the question because I'm sharing over here.
Have you done any calculation for the auctions to see if they're under or overpriced?
Yeah. So I'll give you my viewpoint on it. I think that people are getting a huge discount on HEX that are working within the auction. And it's because I'm HEX centric that I think this way. So if I wanted to take a new position, what am I looking at? I'm looking at the cost of a T-share for Quattrocinco, to stake for Quattrocinco. And we know, that roughly that's about $220, $230. And I believe, I don't have the number exactly off the top of my head, that I've been seeing that they've been selling for about 150 to 170. And it varies on the bids, but a pretty good 30% discount, and maybe declining a little bit as people run out of Hadron or Hedron to purchase with. So yes, big discounts in my opinion. So what does that mean to me? I'll give you my viewpoint on it. I'm involved here until 2038. So for me to pick up another Quattrocinco it's not like I suddenly have to be around in 2038. I'm already going to be around in 2038. And so if I thought that I wanted to get some exposure that way and purchase an HSI, I can purchase one and just hold it for 15 years and end it like I normally would, And so that's kind of my thinking in that along those lines. Now there's a whole game that's being played having to do with the ICOSA, turning in the stakes for ICOSA and staking ICOSA, but that's a whole bigger, different subject, And yeah, Maddie, and the other thing I would say about this is knowing that you can come find your mintable Hadron. Yeah, guys, there's looks like there's going to be a lot of people that aren't ever going to mint them. you know, and that's okay. You don't need to mint them. You don't have to mint them. But what's interesting about that is once those stakes are ended, that Hadron never comes into existence. And so it has an effect on the overall ecosystem. But the other cool thing or interesting thing, you know, to me is all these stakes that are bleeding that are out there that are you know, past their expected end date. If they haven't been ended, they can still mint. And so we have quite a few stakes. If we look at the bleeding stakes that are out there, and now I haven't added that information here to show Hadron, but if we go look at unclaimed hex that's out here, you know, we have 32,000 stakes that are past their 2 weeks grace period, and so close to 33,000. So there's some amount of Hadron that can be minted for all of these. So it's kind of interesting that, you know, whether it was an intended consequence or not, I know that Alex knew about this and had spoken about it because people asked him about it. But whether it was intended consequence or not, you could have been underwater on your hex stake. You can be underwater on your hex stake because it was like, if we look at a very silly one, like a 14 hex stake, right? You're not going to pay the gas for 350 days probably for that, right? But you can come mint your Hadron. So for some of the larger stakes, you might get that. You know, you might see that while it still may not make any sense to actually end the stake, you really would want to mint your Hadron at some point.
That's kind of interesting.
Yeah, because, you know, a lot of people, we felt bad. I mean, I felt bad anyways. I mean, I know people did small quantities at a time where we had very little cost for gas. I mean, it was a penny. You know, it was 2 cents to stake. It was, you know, it wasn't, you know, it made at the time it didn't seem like it made a difference, you know, how low you went to some people. So, but yeah. So some cool things going on. I like the idea that whole Quattro Cinco by the end of the year. I do think we might hit you know, 10.2 or lower, maybe as low as 10.1 million in TShares, and that will affect our you know, that's going to affect our payout. Now that can change, right? And I expect with adoption it will change. Particularly, we have a lot more users coming in, and they start staking. The TShares will go up. Now, how much? I don't know.
Two more questions for you. People are asking, can my HSI contracts, when at auction, be put into my MetaMask wallet? And how does the website analytics look in the bear market?
Yeah, the first question, so you need to go, you do need to get more information on your own to make sure I don't misdirect you. But in HSI, the whole purpose of an HSI is the fact that it's something that's created as a contract. Is that actually the holder? You own the contract, but the contract is the holder of the stake, which means you can put it through a process to make it an NFT, which is called tokenize. And so if I tokenize an HSI stake, I can send it to anybody I want to send it to, any address that I want to send it to. So yes, you could do that. Same security rules apply. You know, you need to make sure that you maintain a good security posture because NFTs can be stolen just like anything else. I hope that answers that question. And then what was the other question? Oh, website analytics. I'm guessing, Ash, that you're asking about the number of people accessing my site. I think that's what the question is. I have seen a great increase, but I don't run analytics on that site. I don't do any at this time any cookies or anything of that nature. So I truly only know that I have more people asking me about it and commenting about it. That may change in the future, but I have to, I'll have to get into a little bit of web development, light, or find somebody who's willing to do it for free. And I mean, it's probably not that hard to do. You probably worked on some stuff yourself, Maddie, right, with your website?
I don't really know too much about websites. I just link blogs basically as my website as my publisher, and just that's kind of the approach that I take, is just to send the traffic to a blog that has lots of clickable content and stuff.
Yeah, and that's about my level of understanding at the moment. Not that I couldn't, but I chose to focus on the Hexfire stuff rather than digging into that. And I think the reason I think the reason for this, I use that stupid WordPress, man, and I was like, what the heck? By the time I was done using that for a little bit, I was like, I don't even want to touch it. So I need to figure out something different. But there's some people laughing right now watching the stream going, man, web development's so easy. I know. I can write HTML, but sometimes the tools take some time to get up and running on.
Could you see Diraj? Awesome. Well,
more or less.
This is
that Diraj more or less?
It is.
It's Diraj more.
It is. Yeah. So this has been another great episode. The stuff that you shared was fascinating, and so was everything that Axis presented. I really like his ability to pitch why he cares about Hex so much, and like all of us do, we all have a slightly different take on it that it's valuable to come together and hash out. No pun intended.
Yeah, and I think, well, I think Axis's approach is good marriage, right, between between the why and what could happen, based on past cycle performance. We always dance around this, right, because we want to be so careful about what we say. But I mean, these are cycles, and we expect that to some extent the future will rhyme. So.
Absolutely. I don't know why I show this picture of Huddle Dog every time, but I do. So there's that.
I like McDonald's French fries. I don't eat them, but I like them.
Some people like working at McDonald's so they can buy the dip.
Nothing wrong with that.
Nothing wrong. So, yeah, with that being said, hit the like and subscribe button. Check out the links in the description below, including hexfire.io, and lots of other good stuff there. So thanks for tuning in for another Tuesday night. We're here every week. And until next time, my friends, stake wisely and peace out.
Goodbye, everybody.